All right. Hello and welcome to this week's episode of the State of the AI Union. I'm your host, Laura, and joined with me today is Ben Orthlieb of Blue Moon Ventures. So, Ben, would you like to introduce yourself and also your company?
Of course. So Ben Orthlieb, originally French, built Blue Moon, which we're going to talk a little bit about. But Blue Moon came from the idea that you could probably compete in venture by using technology, which has led to a lot of interesting discoveries along the way. Turns out it works. Not only are we investors in DevRev, but a number of other companies. And so our fund so far has been beating 99% of VCs, which is will not surprise most founders. Good tech plus a good process actually works most of the time. That's the whirlwind. Before that, I've spent the last 10 years of my career at LinkedIn, where I was leading M&A investment and corporate strategy.
Awesome. Thanks, Ben. So, you briefly touched on it and you said, like, how can we use AI to help us, build a better VC firm? So, tell us about how you're doing that right now. How are you using AI to help you?
It's very interesting. And I think the key for us is we're using AI to do what most VCs do. We're not reinventing the process or reinventing what investing is. We're just doing it faster, better, cheaper in some ways
Mm,
with AI. And what I want to make clear is that it's not making decisions for us. We're not algorithmic trading because this is still a private market. And so you actually need to convince people to take your money. And a lot of the signals in venture in the core of our decision making is on the founders themselves. And that is a very deep personal conversation, human to human, if you will. But how we use it is really across the entire workflow. So maybe I'll start with step two, which is screening, because it's the important piece to maybe crack first. We use unsupervised machine learning to screen founding teams based on um, their background. So effectively, professional experiences, academic experiences, personalities inferred from what they say, if we can find enough words, either written or spoken online. This helps us spend time, cut through the noise, right? If you sourcing is always problematic because you have to screen, and screening usually takes a lot of manual time, a lot of associate times in traditional venture. The legacy funds, they usually do their downloads of Harmonic on Monday, send spreadsheets to associates, and they have to somewhat find the time to go through those spreadsheets and manually sort of score people. Uh, our approach is one where we say, look, there are patterns. If you actually abstract what the algorithm does, you find 7 or 8 pockets of types of founding teams. We score the founding team that tend to be more successful. And so, of course, there's way more than just screening that we do, but the idea is you need to cut through the noise because no matter what you do, you have too much sourcing. And the ability to basically trust an algorithm that will tell you a better pool of people, more concentrated people, pool of people to spend time with because they are more likely to succeed in venture. That's what the algo does. Now, the interesting thing is once you've solved to some degree step two, then you can go back to step one on sourcing because now we can cut through the noise and spend no time on it. And so over the years, we've seriously amped our ability to source um, founders and founding teams. To give you a sense, last year we sourced 1,100 companies and teams that were already qualified as being seed B2B North America, which at the end of the day, what we do is plain vanilla. It's really how we do it that's different and sort of innovative. And so sourcing and screening at this point is fully automated. We call the system Agatha. I don't know if you have seen or read Minority Report, but in Minority Report, there are 3 people that can see into the future. The best of them is Agatha. And
mm,
so what we say, we're not marketing pros apparently, but what we say is Agatha sees into the future of founders. And so Agatha helps us to, at this point, abstract away sourcing and screening. We keep adding more ideas for how we source because at this point, we just want to see really everyone. Uh, and then Agatha, without any other signals, effectively already improves your chances of success, here measured as graduation, by about 50% compared to randomly picking without any other signals.
Amazing, amazing. And you said 11,000 companies you source,
Yeah,
and you guys are just 2 people, right? Like, you don't have any other.
that's right.
Sounds amazing. 11,000 companies, with 2
Um,
people.
Last year, 11,569 to be precise. What's interesting is we sourced about 1,200 from our network, meaning the sort of classic approach. And it's already 1,200 is already pretty good deal flow for an emerging manager. But we basically 10x that by using data and all sorts of different techniques and sourcing pipelines to really sort of uh, literally 10x that.
That's amazing. So if we sort of move towards this world where sourcing and automation, become really automated, and there's no need for really sort of like um, the VC analyst role anymore, where somebody has to like score the founding team. Where do you think um, that where do you think that learning is going to come from? How will the expertise sort of develop?
Yeah, it's actually, I mean, to be fair to analysts, that
Yeah, yeah, yeah.
they do more than just score people
Sure,
on
sure.
spreadsheets. Uh, I think what was interesting is actually our next step, which is where it's a little bit more difficult, maybe for associates' role, is once we found and scored people, the next step is to analyze what the companies do
Yes.
first before I meet them, and then of course based on the conversation. And there we've built an AI associate that we call Blue, that gives me that detailed company analysis. It tells me potential questions to ask the founders in a first meeting, follow up questions after a meeting, and it does market research and analysis.
Mm,
What's interesting though is that piece is work that associates cannot do today because they don't have time.
mm,
And so, and some people are doing deep research right now. It's what we do is a very highly specialized rag with a very deep sort of knowledge base. Um, because, you know, a prompt in ChatGPT doesn't cut it for smaller companies. But I think it's now more enabled us to do way more that most companies cannot do anyways, even if they have lots of associate and manpower.
mm.
At least for the screening part, we can just do more. And associates, frankly, don't particularly enjoy the hours on
Yes.
spreadsheets because, uh, and then the preparation. To be honest, like most VCs do not have time to prepare meetings, at least the way to the level that we do. In fact, we are now sharing that with a few VCs that are helping using this to either screen themselves or to do meeting preps. The question to your question, like associates are still going to be very important in meetings once you engage with the founders. But really everything beforehand can be automated. And honestly, I think that's where the learning to your point or to your question, the learning comes from the iterations on meeting founders, debriefing with GPs, not so much from almost the grunt work that happens before. The grunt work has to be done. It was done manually. It's now done, at least for us, with
Yeah.
AI and tools.
Or even in like retraining the agent and giving it more
Yeah,
information, right? Those are the things
yeah.
that they can learn from. Yeah. Awesome. Okay.
Where
So,
it gets dicey is once the analysis we get after a first meeting, both on the company and on the founders, is becoming very, very strong.
and let's talk about that. So, like now that you've met a founder and they've already been scored, so they're all good on the first pass.
Yes.
You're meeting with them. What do you think, or how do you think founders should um prepare for those conversations, given that they've already been pre-screened, and this pre-screening rate is like very, very high, very accurate. It isn't, they don't have to change your mind on some like uh uh, uh non-objective, some subjective qualification, that kind of thing.
Yeah. Yeah. Maybe to be on our process, this is just step one. I only meet people with a certain score.
Yes.
Um, I will only meet people that I've scored, but at that point, whatever your score is, I at that point do not care anymore,
Yes.
because it's just a screening and it's imperfect. Of course, there's type one, type two error, but I have learned to over time trust the process and just know that you know ultimately the main constraints of venture is time to meet with founders. And so I do not have the luxury of being able to meet 11,569 founders last year. I can probably meet between 3 and 400 a year. And that's how I sort of put my screening. Uh, After that is human assisted by AI for decision making, but it is still a human decision.
Mm. Okay, let's talk about before they get selected.
Yeah.
Since we know that the founders are being, pre-screened and it's pattern recognition, as you said. What if the founders are not part of the pattern? I don't. Maybe that's part of the pattern itself, right?
Yeah.
How can they prepare? How can they prepare to get noticed also ahead of time?
Yeah. There's two elements. One is what's been fascinating in unbundling our algo, if you will, is of course there is the pattern that most VCs kind of screen for by default, right? You went to Stanford or MIT, you went at Google, Facebook for a couple of years, you've already done a YC company. Those people tend to score well. But we've found that there are many pockets that get mostly ignored by VCs that still get picked up by an algorithm, which actually is a good thing because it means now you don't necessarily have to have just the one flavor of founders that legacy VCs tend to like. You can actually be different and succeed. So a critical example or a clear example of this is Mercor. We invested at Mercor in the seed round alongside General Catalysts. And so, of course, a few funds like them, but most funds actually screen them out because Mercor is three first-time founders, dropouts, which dropouts can be interesting in B2C, not so in B2B. It's not part of the usual sort of profile, if you will. The So they didn't fit the usual profile, yet they scored very well on our evaluation. So we engaged with them.
Mm,
Now, how to get noticed? I think it's not so much for US founders because they tend to be quite prolific on LinkedIn, X, etc. But I think being sharing information out there about you. Uh, we capture stealth founders. Stealth used to be very hot topic in VC, not so much. It turns out because stealth without other information at seed, which is what we do, so not
yes,
exactly
yes.
your first check, tends to be a lot of noisy evaluations and so random meetings. And again, the critical thing is time. So it's cool to be in stealth. It's a good way to get detected, maybe, but and we find about 5-10% of the founders we capture are in stealth. But if you want to have the right VC conversation, it's better to be a little bit more forthcoming, I would say.
Yeah. Yeah, yeah, yeah. And it's really nice to hear, I think, that, even though your scoring is based on patterns, that it is picking up those opportunities that are not necessarily a part of the legacy,
Yes,
the legacy
I
pattern and what they're looking for, right? I think that's the thing that people are afraid of, that okay, if they're not
totally.
pattern.
And one key output is diversity, and so it is not diversity by design,
Yes.
right? We didn't force it into the algo, but it turns out if you look at a portfolio, which is effectively what we do, you end up with a portfolio that's 10x more diverse than the average inventor. So 25% women founders, 40% women
Wow.
co-founders, and sort of true across all statistics. And it's interesting because this is the outcome, not the input.
Yeah, yeah.
So it tells you look at different criteria.
Right, right, right. So, Ben, we talked in our prep that about how you show your prep to your founders. You share the information
Yes,
and the analysis with them, and I saw it, and it was very impressive, right?
thank you.
Um, that that these founders are coming to have a conversation with you, knowing that you already have this level of technical expertise. How do you think that changes that conversation around their around showing their product, or how do you think it should actually change? If you're not sort of getting the conversations that you want in those meetings.
Yeah. For us, it was a bit of a game changer when we decided to test sharing it.
Mm,
Um, because one of the key metrics in our flow is, we find you, Laura, and Agatha thinks you're amazing. Now, most of the time, I don't know you, so I need to get in touch. And so what we do is I would send you an email saying, Laura, Agatha, my AI, found you and thinks you're a great founder. And I've already been doing work on what you're doing. So I'm prepared. And so here's a link to my AI associate analysis. Here are some very, very tailored questions. And the more, when we started, we were a little bit shy about sharing all those things, right? And it turns out founders love it. And it makes sense in retrospect. The idea becomes from the first touch points. We're not traditional VCs. We are tech founders.
mm,
We are tech founders in the VC space, but we're effectively more of a fintech. And so the number of times I've had founders tell me a version of, I'm building all day long with AI, but it's the first time I'm seeing a VC that's building with AI. I really want to talk to you. It's been really sort of a bit of a game changer in terms of the ability to, without asking for intros, etc., just get through and have direct conversations. Um, so that's been quite important in some things we found over time as we were building it. That really changes the dynamic. Of course, we're also a small check. Our strategy is 250K check as
yes.
part of a bigger round. So the sort of stakes are different. But our ability to find you and talk to you is 75%, which most outbound VCs from top funds is sort of in the 30% range. So that really tells you not only do we get informational advantage because now I show up in a meeting very prepared, so I have real questions to ask, but it also actually has a very clear impact on our winning ability by effectively positioning us as a different sort of, as more founder like.
Yeah, and I think we also talked about this where it's like, hey, if I am an AI founder and you're coming to me with that kind of expertise, that's more likely
Yes.
to be an opportunity for me to want to work with you.
Yes.
Versus maybe even like a big name.
Yeah.
Since
I've uh,
go,
on that front, because it was part of your question also, I've had founders that were like, "Oh, you guys have built versions of what we're trying to do, of
uh-huh,
course, for a different market or things like that." And so that creates sort of very interesting conversations because the founders understand that they can go one click deeper from the get-go on what they're doing and how they're approaching it,
yes.
because they understand from what we send them the kind of things we do.
Mhm, mhm. And, we you briefly touched on this earlier where you said you had a really high win rate.
Yes.
And now that founders are able to find investment opportunities, like Blue Moon, where the founding team has experience with AI and, they're doing a lot of these things. How do you think that just in general that has changed the outlook of the investment market, and how people may be shifting away from these brand names, brand name VC firms, etc.
I think brand names still matter,
Mm,
uh, because venture is partially a game of branding and momentum.
yes.
And so having a good VC on your cap table at a certain point still is a signal to the market that helps you recruit, that helps you reassure your customers that yes, you're early stage, but look at the investors that are backing us. Now, I that said, founders are a lot more careful or skeptic in their choices because they understand that a lot of VCs haven't coded in many years. And the fact is, only 14% of GPs are engineers by background, and it, it's not a ding. They've been doing something else, but the most part haven't been coding for the last 20 years. And so I would say the opportunity is for funds like us to carve a niche because all of a sudden you're more attractive to founders. That said, it's also part of why we're a small check and I don't compete to lead. You still need a very strong brand name VC to help you out, or at least to share their brand with you. Really, is sort of what it comes down to. But one fun and one person that's been very good at sort of carving out that niche is Tomasz at Theory Ventures. Right, he's been writing about tech pretty much every day for 10 years. They have real technology to help them do venture, and that helps him compete and carve a niche for himself or a good niche for himself in the market. Now he leads rounds, and so he needs a lot more of that, which he does have given his background. But he needs a very high level of credibility to win against some of the bigger names. Uh, but it is surprising to us that very few VCs have evolved from the traditional model of branding by sort of podcast and sort of blog post without really going down the path of competing on tech. And so
Mm-hmm.
there's only a handful of funds that are competing on tech.
Mm-hmm. Okay. And I heard that that Harvard Business School is doing a case study on the
Yes.
competing on tech thing. Tell us a little bit about that.
Yes, it's been a fun ride with the team at Harvard, but we have been the object of a case study, if you will. The case study is actually kicking off next month, so we'll be in Boston for the first sort of student discussion on the case. But the idea is an interesting one and one that we asked ourselves. The question is really, okay, you've developed all this tech for yourself, right? It is very tailored to our process. Now, should you share, should you sell some of these elements to with other VCs? Um, do you become a product company? Do you stay a venture firm? Are you somewhere in between where maybe you share technology with LPs and VC friends, which is the path we're on right now? But yes, that's been a fascinating journey, in part because going through the process was also um, forced reflection on our part. So that was quite an interesting outcome. But yeah, it also does tell you that while every other asset class uses a lot of technology and data, venture is very much in the early stages. And so a firm like us, small, relatively unknown brand, still makes it to Harvard as a case study as something novel and interesting.
Yeah, that's very interesting, isn't it? Because all the money is going into tech, and it's still, a lower tech industry. Okay,
Yes.
cool. So we know now that basically every founder out there that's raising money is probably doing something AI related. So
Yes.
it's mostly help me fund my AI idea here. What are some things that you would encourage a founder to think about to really show their value add, and what should they be asking their potential investors?
Hmm. On the first one, it still is. Yes, AI is the technology you have to use at this point. But it really comes down to classic, almost Harvard like strategy. Like, how is what you're doing differentiated, hard? Uh, and given that technology is going to be easier and faster, so hard technology becomes way harder. So if you have an advantage there, it's probably very strong. But the middle part of technology that was a lot of software is actually become super easy. So what makes your company still a potential winner in a world where a lot of it can be copied or replicated by other companies? And so it comes down to positioning, key product insights. I think the value of domain knowledge has actually gone up tremendously because now most of tech isn't the limits. So on what people are doing, and so it comes down to really domain knowledge and an understanding, deep understanding of your customers.
Yeah,
So with
and sorry, Ben, on that,
oh,
let me
sure.
interrupt. Is it, I think what you're saying is that the the investment itself should not really change because you've always been investing in solving business problems, and it's just that today, we're using AI, and you have to be using AI to do that. So,
Yes.
do you think on the messaging side, on the pitch side, if I was a founder and I was
Yeah.
pitching to a VC, should I start with here's the problem that we're doing and we're solving for it, and by the way, we're using AI to do it, or should we start with we are using AI to solve this business problem?
I think there's two paths. If you're doing deep model level, deep sort of AI technology, you should say, I'm doing deep AI and this is what I'm doing. And I'm solving a real infrastructure, a real technical problem. If you are more of a software solution with AI, it's sort of, it's, if you're not using AI, is mostly like that would actually be mostly a reason for questioning, but
Yes.
it's not the, oh, I'm doing vertical AI in real estate. Great. I mean, so fine. Like everybody, like there's a lot of companies that are doing that. So yeah, I think it depends then the application. Building with AI, I haven't seen a startups in week that hasn't told me they're building with AI. Of course, everybody's building with AI.
Mm,
It's not the same as being a deep AI company, if we
right.
want to use this term.
I cut you off there. I think you're going to answer the second question, which is what founders should be asking their VCs.
It's a very good one. Uh, there's the usual, what can you help me with? I don't know if it's actually that helpful. I think you should, what you should be asking their VCs is probably make me intros. I've found that people that, of course, you need to be a little bit more chaste in that by tier ones, but asking VCs to prove to you along the process that they can add value is actually better than any warning. So
Mm,
one way we do that, for example, is we're small. We invest as part of larger rounds. We make lots of intros to bigger VCs that can lead during our process. Last year, in
mm,
fact, we made 278 intros. Uh, and again, we're small fund. We don't have a brand. You take the meeting because you're like, oh, Blue Moon is doing tech. That's cool. I want to learn more. But the fact is, through your process, I'm very likely that I will give you a handful of intros to tier one funds. And that makes my value tangible to you. There's a whole bunch of other things that I do after investments, but at least I'm putting in some work up front. And so it's really, I think, this question like what can people do for you up front
mhm,
is
mhm.
one, and then the other is I would ask VCs or honestly previous portfolio companies how the VCs and the brand has helped them with getting more customers or better hires.
Yeah. Hmm. Hmm. So really like dig down, can they help you get more introductions to VCs,
Yeah.
customers, and ask them to kind of prove it along the way is what I'm hearing.
Yeah. The reality is some VCs add value beyond that. But at the early stages where I'm at, the real question is, does the brand and or what they do help you grow faster and grow faster because you secure more sales, you secure more or better hires.
Yeah, awesome. Okay, so Ben, let's learn a little bit more about you. You transitioned. You mentioned that you were from France and then you
Yes.
transitioned to the Bay Area. Tell us a little bit about what brought you here.
Oh, uh, I've always wanted to come work in the US. I grew up, my dad was a commercial pilot. And so I have been to Los Angeles an inordinate amount of time for a French teenager. And
Okay.
so I always had this idea in the back of my mind. And so I found my way to San Francisco, first working for a French Bay on a rotation program that clearly was leading me here.
Okay. Okay.
So that's how I landed here. Things evolved. I did an MBA and then sort of permanently came back to the Bay Area.
Okay. Fantastic. And what's one French food that you just absolutely cannot find over here?
Absolutely cannot find. Um, I it is very hard to find, but still exists. Boeuf bourguignon is like a stew, but there's a secret ingredient to make it really good, which is you need to put a piece of chocolate in the stew at the last minute. Very few people know that, so there's only one or two. restaurant, I think, in the Bay Area that get it right.
Which ones are those?
Uh, there's Côte West in the Marina, and then in Sausalito, this place called Suzette. They have it on a special on a rotation.
Awesome. Okay, and last question here. What do you think is one thing that Americans can learn from Europe in technology and interacting with, let's say, VCs, etc.?
It's funny because usually it's the other way around. Like I think Europe still has a lot of to learn about the venture ecosystem and
Yes.
and building startups. One thing to learn, one thing that's been interesting is there's a lot of great AI engineers and researchers coming from Europe and France in particular. And my theory on this is, and I sort of, I was doing machine learning as part of my engineering study way back. Uh, it was a space that at the time wasn't seen as commercial. And I think that's why, on a relative basis, the US sort of deprioritized it compared to Europe that kept doing research on it. So maybe the learning was be a little bit more patient on seeing potential economic outcomes when interesting tech comes along.
Well, that there's a lot of talent there that might be untapped,
That is for sure.
right? Yeah. Okay. Awesome. Ben, thanks so much for being on the show. Is there anything
Of
else that you'd
course,
like to leave our listeners with?
I think. I mean, people listening to you and the DevRev team probably know this, but experimenting with AI opens up so many ideas and so many sort of new avenues for how to reinvent the process. At the end of the day, what we're seeing is what we do is still unique 5, 6 years in, not because of a lack of tech, but because of culture. And so most people, most companies are wary to change their processes, which it makes total sense. However, that's where disruption comes from. And so my small advice is experiment and play a little bit, and you'll get down the rabbit hole pretty quickly.
I love it. Let's go. Let's go experiment. All right.
Exactly.
Thank you so much, Ben. And to our listeners, if you like this episode, please drop us a comment, leave us a like, and subscribe. And until then, we'll see you next time.
Bye, Laura.
Bye bye. This episode was brought to you by DevRev for Startups. If you're a founder building with AI and have a story worth sharing, we'd love to hear from you at startups@devrev.ai. Don't forget to explore the DevRev for Startups program on devrev.ai/startups, where you can get up to 12 months of credits and much more to experience true team intelligence with Computer, your AI teammate.